Mute.
Okay, now can you hear me?
You're good.
All right, awesome. I was getting nervous. Whew.
You know what? That's how it is with me too. With these, it's the Zoom that goes wrong. Everything
Yeah.
else I can handle, the questions, the content,
Right.
people, whatever. It's when the Zoom goes
Fails.
wrong.
Right, exactly. Bill, can I try to share my screen before we get started with the
You know what?
presentation?
I'm going to do mine, and then I'll stop, and then I'll share yours. Be sure we're good. So
you're actually going to share it. I don't need to do anything on my end.
no, I'm going to do mine because I don't have yours. So I got like 10 slides. Tell me if you can see my stuff coming up. Can you see my slides?
I can. I did email you not that long ago. So I could either I load them up or you load them up, either way. But if I'm going to do it, I just kind of wanted to give it a test run really quick.
Right. Okay. I'm going to stop sharing. You see my slides, right?
I do.
Okay. I'm going to stop share. So this is how I got 14 slides. I got to say, SBDC and this and that and who's who in Illinois. I'll stop and then I'll hand it over to you.
Perfect. Let's see how this goes. And can you see my screen?
Yes.
Awesome.
Yeah.
Easy peasy lemon squeezy.
Yeah. Yeah. So, I'll do my 5 minutes. I'll say, I'll go through yours. I'll say, if you got questions, put it into Q&A. At the end, we could do some of that. And yeah,
cool.
That's it.
Can I try something really quick? I just wanted to see what it looks like from your end.
Hey, Eugene.
The view.
Hey, Bill.
I wanted to see if there's like a way to do the notes view.
Yeah, you know what? I see your notes here. You know what?
Yeah, you do. That's okay. I'll just do it with the hide, like this. So we can.
You'll have to tell me how to do that. I don't know how to do the. I don't know
how to do the notes.
Yeah, like without putting them on the screen, but okay.
Right, exactly. It's going to be the old school version, which is print. In fact, let me see. There's a couple.
Yep.
I'm sorry. I was just going to say there was a couple that I wanted to maybe just look at just to make sure I don't miss them. The points, basically. All right,
by the way, I looked this morning, we had 61 registered.
61. That's awesome.
Yeah.
I was going to ask you about that. I was thinking that this morning. I was like, oh darn, I should have asked you. Sorry, it's like uber loud now. Probably. I'm going to print a couple here just because there was a couple notes I put in on some of them that I wanted to make sure I did not miss.
Ursula,
yeah.
I know this, but I don't know this. How do I say your last name?
Ursula. No, I'm just kidding. Vanginovic.
With a V. Vanginovic.
Yeah, just don't look at it anymore.
Yeah. Well, what I'm going to say is Ursula's sort of like LeBron in the NBA or Oprah on TV. Ursula in Chicago is a one-namer.
I love it. Thank you. That's a new one. Back in the day, it was Cher. I think I'll take LeBron. So Bill, who's on there? Like, do you know some of the exporters that are going to actually be on there?
Some of them. Yeah. Okay. And, there's, because this is put out to the state. This is put out to the WBDC network, which has got like 10,000 contacts. But I recognize several that are just prime, what we're looking for, right? Like M-Hub companies, that have been up and running. And they're talking to me about export, like medical technology, medical device, right? Where going overseas is very viable. And they're going to do a trade show and they're talking distribution in different countries. And so this is a perfect product for them as they expand out and, reduce their risk. So there's several like in that category. And to me, that's who we're, sort of pitching this for.
Perfect. Of course, I think I tried to print one slide and I ended up doing the whole enchilada. Hold on 1 second.
All
Like,
right.
of course, now as we're about to log on. Yeah, printed the whole thing.
Eugene, where are you located?
I'm in Maryland, right outside of DC. So I'm at our headquarters down in DC.
All right.
Home for right now. But,
Yeah.
yep. And you're in Chicago too, Bill?
Yeah. Yeah. Working at home for
Wow.
a few more months.
Mm-hmm. Mm-hmm.
Yeah, any word on your end? Like, do you guys know when you're going back or?
Yeah, they saying they'd like to go back after Labor Day.
Okay, where are you gonna go?
The office is right across from the Bean in Millennium Park.
Oh, sweet.
I'm on
Nice
Michigan
location.
Avenue. It's
Nice,
a pretty nice location.
awesome. You know what? My headphones are not working. Oh, all right, I guess I'll take them out. It's always something.
Yes.
Always something that has to go, right?
Yeah. And okay, so as you'd like, I guess people are coming in. Okay.
Awesome.
I guess
Oh,
I
we've been-
started it. Yeah.
Okay, cool.
Okay, we're recorded. We'll just let it go for another 2 minutes, 3 minutes.
Sure. So Eugene, M Hub is the organization in Chicago I mentioned before. I think they're great. We're lucky to have a lot of organizations in town, but these incubators I think are awesome.
Right. Another minute. People are coming in. Thanks. We'll go 30 more seconds and then we'll get started. Okay, welcome everyone. Broadcasting from Chicago, the International SBDC International Trade Center at the Women's Business Development Center. Welcome to this month's webinar. How can the U.S. EXIM Bank help a small exporter? So let me introduce a few, myself and a few organizations, and then we'll shortly move into content. The International Trade Center is located at the Women's Business Development Center in Chicago. The WBDC is Illinois' SBDC network, small business development centers around the state. The WBDC is a well-known, well-established nonprofit that's been around since 1986. It's got offices throughout the Midwest, and the focus is providing support and services to women's business owners. And that's where the International Trade Center is located. So within the WBDC, also we've got this SBDC that's got services for your business, not necessarily related to export. So if you're looking for some assistance in terms of early startup planning, funding options, etc., the SBDC at the Women's Business Development Center has a full schedule of programming. If you're interested in government sales, selling to federal government, city government, county government, there's also what's called a PTAC that's focused on that, and a whole menu of programming that can help you position yourself to sell to governments. So just you feel free to reach out to me, and I can put you in touch with people within my organization at the WBDC that can help you. So what do I do? So I'm managing the International Trade Center. And what we do is help companies who want to enter or expand in global markets. My client base is both within the WBDC clientele and outside throughout Chicago. And the type of things that we do is help companies determine if they're ready for to export or not, help them develop a plan, talk about channels and strategies, and as we'll get into further, introduce them into a network of experts that can assist them in what they're trying to do. So who am I? I've been in the international trade international trade community in Chicago for about 30 years. I worked in the private sector for 30 years and as positions in managing, exporting, building exports of different American companies. And that work took me all over the world. Lived on 4 different continents, worked in a lot of different business sectors. And now I'm glad to be advising companies on how to do the same at the International Trade Center. So what do we do when you do come to us at the International Trade Center? First thing we'll do, we'll just sit down and talk about what do you do? Try to understand your business, and we'll see, and we'll brainstorm whether you're ready for exporting. If so, we can help you develop your strategy and an export plan. We can do some market research for you, and out of those 190 or 200 countries out there, what are the best markets to focus on? What would the channel in your customer base look like? And from there, we'll start figuring out, so what type of partners should I work with in these target countries? At that point, we can reach out and work with state or federal agencies to help you assemble that pool of partners, and then we can help you sort through that and evaluate and select who's best to work with. So the point is, at the International Trade Center, we're there to help you get started, to grow your business, or create your international team. We also put on regular webinars like this one. Later in the month, we're going to talk about what UPS can do for a small business. In July, we'll talk about international due diligence, meaning, okay, I have somebody I want to work with in terms of a distributor I want to sell to, or maybe a company that you want to buy from. How do you check them out? And that's what we'll talk about on July 19th, and we'll have a full schedule of webinars as well. So just to let you know, that's who I am, that's where I'm at. As you go through this, you have questions at the end of the day or onwards about international trade and building your exports, you can find me. So what we're going to do today is we'll look specifically at U.S. government EXIM Bank's product about credit insurance. And it's a very specific topic, but it's very helpful to all sizes of companies. So we'll look into what is it, how does it work, what are the benefits, how much does it cost? And we're fortunate to have Ursula Vegranowitz of the Chicago office who will present. I'll tell you that Ursula in the Chicago international trade community. If you want to know about international finance, Ursula is a one-namer. She's like LeBron of the NBA. She's like Oprah on TV. If you're in Chicago and you need to know about trade finance, people say reach out to Ursula, and everybody knows who she is. So we're very lucky to have her today. We're going to go about an hour. She'll go about an hour. We'll have, if you got questions, we'll have Q&A at the end. You can put your questions in the Q&A. If we don't get to it, I can capture that later and circle back and get to you. I can't capture the chat later. So work with Q&A if you want to somebody to follow up and touch base with you later. I'm also, let me just get spend a few minutes to talk about what the state of Illinois is doing to promote exporting and their grant program, and then we'll get into the EXIMs. So briefly, I do work with, I'm your gateway to the Illinois Global Network, right? And the Illinois has offices here in Chicago and throughout the world, really. There's 6 offices throughout the world, as you can see. And the message here is Illinois firms support and support exports. And they want us to, there are programs, there's resources, there's people in place to help you grow your exports. As you see on the bottom, again, what I can do at the International Trade Center is be the gateway to these organizations for you, and give you access to a robust international trade network that has to do with the America's SBDC, the Small Business Administration, EXIM, the Commercial Service. These are all people that we can help you connect with to grow your exports. Just a note about the grant programs. Illinois promotes exports, and one of the ways is with the I-STEP grant program. Grants are free money. Okay, you have to meet certain requirements, but these grants are there to support trade missions, sales missions, website localization activities if you want to go e-commerce, product certification if you need, for example, a CE mark in Europe for your product. The I-STEP's available for that. Just a few notes about these grants, and again, if you got questions, you think it's something you're interested in, let me know later. But these are in general the requirements. 1 year as a company, an Illinois company, fewer than 500 employees, at least 250,000 in revenue, and understand about the costs and the strategy for exporting. Also, it's going to have to be at some level of US and Illinois content. So that's available. And actually, we've got several companies we're working with that are taking advantage of these grants, and it's quite helpful. It's not a full grant. So let's talk about a trade show. It'll subsidize. If that trade show is $8,000, it'll subsidize some portion of that. It won't pay for the whole thing, but it certainly helps you with your exporting. And again, the Illinois Department of Commerce and Economic Opportunity is there to assist. So from there, I'm going to stop sharing, turn it over to Ursula, and let's get into EXIM programs.
Awesome. Thank you so much, Bill, for having us this morning. Really appreciate it. Hopefully you can see the presentation really quick. Thanks everyone for joining us this morning. Really appreciate it. Hope that you can take away some help this morning in terms of some ideas. We're going to talk about some case studies, some Chicago companies, just some exporters who are currently using our services, kind of where we came in, how we helped them with their export plans, and again, hoping that you guys will be able to take something away from this morning. So we're going to start out really quick with, why should you export? I'm not sure that all of you on the phone or online today are currently exporting, but as we like to start out and explain to companies, 95% of the companies, the consumers around the world are outside of the United States borders. So when considering, business expansion, at some point in time, you're probably going to plateau here in the United States as far as growth is concerned. So we just want you to keep in mind that there are a number of consumers, a number of businesses overseas who are very interested in U.S. product. And we'll talk about the how and the payment piece of it in a little bit, but just something that we want you to keep front and center of your mind. Just like we have diverse portfolios as far as investments are concerned, we want to make sure that we have a diverse base of customers, whether that's here in the United States, and certainly overseas. As things kind of slow down in the US market, the other countries around the world might be ahead in terms of recovery. And so the ebb and flow happens all around the world, and just having a number of customers spread out kind of helps you again in that diversity standpoint. The other thing that we see is that many of the companies that we work with that actually are exporting are more profitable. They're paying higher wages to their employees. So it's just, from a business standpoint, more longevity, more ability to kind of stay in business. And certainly for some companies who experience seasonality, kind of helps smooth that process out. Some of the challenges that we hear too is that, look, I'm busy right now as far as the domestic market is concerned, and kind of just like we talked about a minute ago, the ability to make sure that you have diversity in terms of your customer portfolio is good, because if things slow down here, they may not be in other parts of the world. Is your business too small? Likely not. A majority of the companies that we work with in the Midwest are small and medium-sized companies. We work from sole proprietors all the way up to very large companies. EXIM Bank tends to be known as Boeing's bank. If we make the front page of the newspaper, it tends to be with Caterpillar or GE Medical or Boeing. It's kind of the larger names. But really 90% of our transactions are done with small and medium-sized companies. And so we really work with any size company and really any size transaction. And what we're going to talk mostly about today, EXIM does a variety of different services, but what we're going to focus today is really what Bill, nailed and said, hey, I really want you to focus on how are my customers going to get paid when they start selling overseas, and how do you take the worry about getting paid. And then we'll talk a little bit about some of the resources, how we work with other agencies and partners like Bill to make sure that you get everything that you need to get you started. So those of you who might not be familiar, our name is kind of confusing. The Export-Import Bank, we've been around for 86 years, and we are a federal government agency. We're part of the executive branch. We're kind of standalone. Other than the Treasury Department, we're the only other agency that carries a full faith and credit in the United States government. So while we are a government agency and our import is in our name, originally when we got started, it was started during the FDR administration to kind of get trade going between the United States and the rest of the world, and hence the name Export and Import. But we quickly pivoted to really focusing on just export. So the import in our name is for those customers overseas who might be able to take advantage of some of our services. We have representation all around the United States, here in Chicago, up in Minneapolis, Louisville, all around the Midwest, as well as other parts of the country. So we are just a call or a Teams call or a Zoom call away. There's really 3 programs that most small businesses take advantage of. So I'll just kind of mention them here, and then we'll focus on the credit insurance piece in terms of what we do. So we were created really to get exports going, and at the end of the day, create jobs here in the United States. We are looking for companies who are either manufacturing product here, providing services from the United States, and we look at making sure that those companies can get paid if they're offering open account terms internationally. The other thing that we do is just similar to the Small Business Administration is we'll work with commercial banks, your bank, to make sure that if you have a large international order, that you have access to cash that you need to make sure that you can buy or build or pay for the labor associated with being able to support that purchase order. And then lastly, we have some programs that are specific to capital equipment manufacturers who might have end users overseas contacting them saying, hey, we'd like 3, 4, 5-year repayment terms. So if any of you have either working capital needs or your capital equipment manufacturers yourselves, and you have customers overseas asking for leasing terms or just asking for longer repayment terms, you can reach out to us anytime, and we'd be happy to talk through. It's a lot of different programming. So today we wanted to just focus on the credit insurance side to make sure that most companies are in that space taking advantage of that particular service. So again, like I mentioned, we're working mostly with small companies. We really work with all size companies. Our goal is to make sure that there are jobs created in the United States. So we're agnostic in terms of size of company. We're agnostic in terms of who owns the company. Even if it's a foreign owned company, but it's domiciled here in Illinois or anywhere else in the United States, we're happy to work with that company because again, it's about jobs. Ideally, we're looking for companies that have been in the same line of business for at least 3 years. There's always exceptions to every rule, but in general, that's kind of what we're looking for. No transaction is too small. We had a Illinois company a few years ago that was sewing costumes for Renaissance fairs, and they had an order from a German company who was supplying costumes for their Renaissance fairs, and it was like well under $10,000. So doesn't matter to us what size of the transaction. As we'll get through this presentation a little further, we're going to talk about kind of what the costs are, but you'll see it's really a function, it's a percentage of that invoice amount. So for us, really the ability to do a transaction kind of just depends on the credit worthiness of your customer. How credit worthy are they? And then I should mention that EXIM Bank, as far as insurance is concerned, is really, we're just the government's provider. We're kind of an insurance carrier in that respect, but there are many private companies that are involved in trade credit insurance. Your AIGs, your kind of household credit or insurance companies that have many divisions, some of which include credit insurance. Kind of where we come in is to help companies who may not have the volume of business to justify the minimum premiums that some of the private sector companies charge. We don't have, we're not a for-profit corporation. And so that gives us the ability to be flexible and work with any size company. So really quickly, what exactly is credit insurance? I mean, credit insurance, it is an insurance policy and on your accounts receivable. There is domestic accounts receivable insurance. That's not something that we get involved in, but that does exist. And what we focus on is foreign accounts receivable insurance. As a business owner, if you take a look at your balance sheet, most of the items on your balance sheet are going to be insured, whether it's your building, your cars, you have key man insurance, all kinds of insurance. But a lot of companies do not have insurance on their accounts receivable, which, is simply, I think, for most companies, just not having had exposure to credit insurance in the past. And the purpose of it and the types of customers that we see are really kind of threefold. Insurance, is a sales tool, first and foremost, insurance on your accounts receivable. So we talk to a lot of companies who might be going to a trade show because they're working with Bill or they're working with the Department of Commerce, and they want to be able to be competitive vis-a-vis some of their foreign competition and have the ability to say yes to a foreign customer when it comes to giving credit. Others might already be giving credit, but really are nervous about trying to collect a $20,000 receivable from Mexico, from Brazil, from China, wherever that foreign customer might be located. And so it acts as sleep insurance for them. And then a lot of companies come to us, they're introduced to us via their commercial bank. Their bank will say, we're doing a loan review, we're at a renewal process, they'll see that there's a lot of foreign receivables already. And typically banks will look at foreign receivables and say, that's not collateral that we can consider. Domestic accounts receivable typically is, but foreign accounts receivable is not, unless there's insurance on it, be it from the private sector or from EXIM Bank. And so a lot of times companies come to us that are already doing business internationally, but they want to be able to borrow more money from their bank. And now, if they have insurance on those receivables, all of a sudden they have additional collateral that they didn't previously. And we're going to talk, we're not going to get into the specifics in this conversation, but suffice it to say, we have a range of different products. Some companies come to us and say, I am comfortable with most of my customers overseas. I don't have any needs to borrow, but I have a new buyer in this new market. I'm not really comfortable here. Can you help me out with just this one? And the answer is going to be yes. Yes, we can. Other companies come to us and say, we don't want any risk when it comes to our international sales. We'd like to protect everything. And so they can do that. And some companies say they have got a kind of a combination, some established, potentially distributor relationships that they're comfortable with. They don't want to have to pay premium on those sales. And then others, again, that are typically new, that they say, well, we're not really comfortable with them from a credit standpoint. Can we just look at insuring those? And so our answer, again, is going to be yes, we can look at doing some kind of combination. So we thought we'd start with maybe talking about some actual case studies of companies who currently work with us. Hopefully Coval, for the Chicago folks on the line, is a very familiar name. at your local grocery store when you're shopping on the weekend. Sonat is one of our customers. The company was started in 2008 by her and her husband. They make organic spirits right here in Chicago. One of the first distilleries opened since like the mid 1800s. Pretty amazing story. So as they started to grow, international became part of the equation, and they started to work with EXIM Bank, because prior to working with us, as they sold to their distributors, mostly throughout Europe in the beginning, they were asking for payment in advance. And payment in advance is certainly secure. If you get your cash prior to shipment, it's great for you as the seller. It is not great for your customer. And especially if it's a distributor dealer that you're establishing a relationship with. You know, most of us, even as consumers, we're used to buying on credit. You go shopping, you throw something on a credit card, you're not going to pay for it for 30 days. Your international customers are not going to be any different. They're going to want to have credit. And as you're looking to build that relationship, you're building trust by giving credit to your customer overseas. And so, but it is nerve-wracking, because, you know, hiring an attorney or a debt collection agency to go after a bad debt in a foreign country can be expensive, daunting, time-consuming. And that's the whole reason that credit insurance exists. What Coval does is they have what I like to call our Cadillac policy. It is specific for small businesses. And what we're doing for them is we're providing them 95% coverage on their receivables. So they have a $100,000 sale. They pay us $550 to insure that sale. That's specifically their policy. And then if that customer, let's say they made that $100,000 sale, and that distributor dealer gets to be 90 days late, 120 days late, 180 days late, and Coval decides, you know what, we can't wait anymore. They're not responding to us. This hasn't occurred, just to them, fortunately. But the way the claims process works is that in the event the customer doesn't pay, the US company has the ability to say, you know what, as soon as 90 days past due, we're filing a claim. $100,000 sale cost $550 to insure. Our claim payment is going to be for $95,000. So it's a really good investment. We're talking about just over 0.5%. The time frame is, you know, you file the claim, and within 60 days, you're paid directly by EXIM Bank. We'll transfer the funds directly to your account. But what this did for Coval, and what it does for a lot of our customers, is it gave them the ability to grow. Unfortunately, they haven't had a claim, and hopefully will not, but that's the whole purpose of insurance. It gives you that confidence to start to give credit. I just recently spoke with Sonat, and she's looking now at expanding to the South African country right now, and looking at establishing a relationship there. So gives you that ability to grow with confidence, and we're super happy to be working with them. Another company that we work with up in Wisconsin is that example of a company that said, we've got customers already overseas on credit, and we're comfortable with those customers. And so this company manufactures electronic control devices that go on all kinds of vehicles, so ag equipment and trucks and so forth. And the way they started to do business internationally is they followed their domestic customers, and we see that a lot. They sold to Cat, they sold to John Deere, many household names in the United States. And as those US companies actually went overseas and started to contact them as their US supplier, asked them to provide product to their subsidiaries overseas, this company in Wisconsin went ahead and did that, gave them credit, really based on the relationship they had with the US entity, even though it is a separate legally established entity overseas. But as they went overseas, they saw a new market. They saw other opportunities. They hired an international sales manager. That sales manager went through services equivalent to Bill's here, as well as Wisconsin Department of Commerce and the US Department of Commerce, found distributor dealers, started to sell. And that's when they came to us and said, you know what, we're comfortable with our existing customers, but we've got these new ones that we don't really know how to do any due diligence on them. So tune in July 19th, if I had the correct date there, Bill, on how you do due diligence. But that's part of what we do, is we will teach the company how do we assess credit? How do we figure out, is this a good customer or is it not a good customer? And so we established a policy for them where it's an umbrella policy. They tell us who they don't want in the policy, and then they kind of tell us who they do want us to insure. And typically, we're an insurer in this case. When you're minimizing the risk, you're not insuring everything. It can get a little more expensive, but still, we're talking 60 basis points. So for a $100,000 sale, they're paying $600 to insure. And in this case, there's a small deductible that they pay in case, or would be deducted in case of a non-payment, and then we still provide 95% insurance. And lastly, wanted to talk about one of my favorite family women-owned businesses up in northern Michigan, Hayes Manufacturing. The company is a second-generation family-owned business currently, and we got introduced to them by the U.S. Department of Commerce in Michigan. And the company was similar to our Wisconsin company, already exporting internationally. JLG, very large names, again, household names, felt relatively comfortable giving credit to those household names, but had opportunities to sell to a distributor dealer in India who continually asked for credit and asked for credit and asked for credit. And finally, the company decided, okay, we're going to try this credit insurance thing with EXIM Bank. They took out a single buyer policy. So they said, again, we didn't want to insure these other customers. We only wanted to start with this Indian buyer. So we did that. We started with a fairly small limit, $50,000. The premium was 1.22%, higher than some of the other examples that I gave with Coval or with Hayes. The reason it's higher is because you have one customer in one country. And again, as an insurance company, when we have concentrated risk, it's going to cost a little more. But still, relatively speaking, the one of the owners there thought, paying $610 for a $50,000 sale was worth it. Our insurance on a single buyer basis does not carry deductible. It is a 90% cover. So in the event of a non-payment situation, which fortunately did not occur, there would be a $45,000 claim payment. So works, very similarly to our other policies. This worked out so well. They were reluctant at first to do this, but this worked out so well that eventually the company, Hayes, moved to a multi-buyer, what we call a multi-buyer policy. So they did end up establishing credit and insuring more of their international sales. And then when they did that, when they said, okay, you know what, we're actually going to insure all of our international sales because we're limiting how much credit we're giving to these household names because we don't feel comfortable. But we're telling them, look, you may only give your large customer overseas a $50,000 limit, but you know what? We give them $250,000 because we think they're creditworthy enough to do that. And so they decided, okay, why are we limiting our sales? Why don't we go ahead and start to give credit and let EXIM Bank help us? And so then their premium rates, we ended up setting up separate rates depending on what their actual sales terms were. Again, the longer the repayment term, it's going to cost a little more, but for them, because they had customers rather in many countries all over the world, they were paying just about a third of 1% to insure their net 60-day open account terms, and they were paying just about a 0.5% to insure their longer 120-day terms. So they thought it was a good deal, and we still continue to work with them. So what does credit insurance actually cover? Covers two types of risks: commercial risk and political risk. Political risk is really, from our perspective, any action on the part of the government that prevents your customer from paying you. So whether their import license is canceled, whether there's war, insurrection in that country, they can't convert local currency into US dollars to make payment to you, or can't get money out of the country to make payment to you. Any of those things are considered to be commercial risk. I'll tell you though, from my experience, most of the time, our customers, when they're filing claims, it is for commercial reasons of non-payment. And that is what I think most of our customers are interested in. So what we cover, and what all insurance, credit insurance covers, is non-payment, either bankruptcy or insolvency, or the customer simply runs into cash flow problems and they are unable to pay you. So It could be that you sell to an end user who to a distributor dealer who resells to an end user. If that end user doesn't pay the distributor, may not be in the position to pay back. And so that is a risk that is covered as well. Going to transition here really quickly to talk about kind of some of the resources, and Bill talked about this as well. And we work seamlessly with our sort of sister trade promotion agencies. In normal times, we're located actually in the same office and across the street from Bill. So those of you, you'll have exposure through Bill to the U.S. Department of Commerce as well as the state. Their job is really to help you find that customer. Small Business Administration, like Bill talked about, offers some grant programs, but they also offer financing programs to make sure that, again, you have access to cash so that if you have an international purchase order, you can actually fulfill that. We do that as well. In fact, the application for the working capital has got our name on an SBA. At the end of the day, we'll kind of figure out which agency is best for you. Where we probably are strongest and we're most, the only provider is the service as far as is credit insurance, basically protecting you against non-payment. Some of the other partners that you'll need to establish as you start to grow or decide to become and get involved more in exporting, we do usually recommend the companies establish relationships with a bank that has some international payment capability. So you may go to your community banker for some of your financing, your building loan, but it's probably at one point in time good to establish directly a relationship with a bank that can process your wires, that can maybe at some point in time give you consulting services on foreign currency, maybe invoicing in something other than the dollar. We're not going to go into that, today. That's not something that EXIM really gets involved in. We do allow our customers to invoice in other hard currencies like the euro or the yen. You can invoice. We don't take that risk as far as the fluctuation in the currency is concerned. But that is something a commercial bank can do. The other partners that you need to take a look at establishing a relationship with is you'll have an accountant. You want to make sure that your accountant has some international knowledge, because as you start to export and you get a little bit of volume, you get about a bit of volume in, there are ways that the accountant will be able to save you money. There's something called an interest charge domestic sales corporation, where essentially you'll funnel your sales through that entity and essentially reduce your tax obligation. The other partners, you'll need an attorney. You probably already have one. You want an attorney that can help you write a foreign distributor agreement. And last and not least, you'll want to establish a relationship with a freight forwarder. Somebody can help you from a logistics standpoint. And I'm going to touch back on that, why we at EXIM Bank think it's important to work with that type of a entity. Just wanted to talk really quick about, kind of the process. And really at the end of the day, if you have, you'll come to us at any point in time, we'd like to talk to you sooner rather than later. If you're just in the period that you're starting to explore exports, we'd love to talk to you to kind of arm you with what information is it that we're going to want on your foreign customer. For a lot of our transactions, if we're talking up to $100,000 of credit, and that's what Koval and Hayes did, all we need is a trade reference. Does your foreign customer do business with other U.S. vendors currently that give them credit? Can they provide us with a reference? Or if they can't, can we get a credit report on them? That's all that we typically need for a lot. We don't even ask for financial statements on a foreign company unless we're talking $500,000 and more. And so pretty easy as far as the amount of information that we want. But the sooner that we can talk to you, the more that we can arm you with what is it that we're going to be looking for. And really, when you're looking at going to a trade show, or you're working with Bill, or you're working with the Department of Commerce, and you're in contact potentially with the distributor dealers, we never want you to say no to credit. We want you at least to say maybe. We probably don't want you to say yes right out the gate until we know who that customer is, so we have some time to do a little bit of due diligence. But what we want you to do is to put it in your customer's court. Ask them for a reference. Tell them you're going to run a credit report on them. And that way they have a heads up and they know that you're serious about this. I talked to Sonat at Koval the other day, and she told me she's talking to a new distributor, and right out the gate, she told them and said, you know what, we're only going to potentially engage in this discussion with you about 90-day open account terms, because we will be using EXIM Bank to insure our receivables. So she was very open, and really it's your decision as a company as to whether or not you want to disclose that to your customer out the gate, or if you want to keep that close to your chest in terms of letting your customer know that EXIM Bank is involved. At the end of the day, from an insurance standpoint, we are providing coverage to you, to your company. Our relationship is direct with you. Yes, we are going to do due diligence on who it is that you're selling to, but really our relationship is with you. So it's your choice and your call whether or not you disclose that to your foreign customer. And we have two schools of thought on that. We have, in some cases, Sonat Koval is using them as an example. Right out the gate, she says, we're not going to give you credit unless EXIM Bank approves you. She wanted to send the message that, look, if you're not going to pay me, Uncle Sam's coming after you. Other customers, particularly ones who come to us who already are selling on open account terms, and they're coming to us because their bank said, hey, you know what, if you get insurance on these receivables, we can potentially lend you more money. And in those circumstances, sometimes the exporter, the US company, is a little reluctant to share with the buyer that there is insurance. They don't want them to think that all of a sudden they don't trust them, that there's been any kind of change. And we tell them, look, unless there's a non-payment and you file a claim against that customer overseas, they're never going to know that we were involved in the transaction, because we're not going to reach out to them. So again, these are the reasons that we'd like to talk to you earlier. But if you've got an order in hand and it's shipping next week, we're going to take that call too, and we'll do our best to get a policy and get you coverage in place as soon as possible. We'll leave this information up there in terms of our offices around the country. Oh, you're back here. Let me stop sharing screen or put it back here. Okay. There was a couple of other things I wanted to mention, and I know that we've got some questions in the chat, so we'll take a look at that in just a second. But the other thing I wanted to mention is that it's best to work with your own forwarder, because when we look at providing insurance to a company on your receivable, so you're going to sell to India, just like Hayes did, you're going to ship to them. You're going to insure that receivable, you're going to pay premium to us. What we're going to ask for in case the customer doesn't pay and you decide, okay, I can't wait anymore. Your claim filing window opens up as soon as it's the receivables 3 months late or 90 days past due, and you have up until it's 8 months past due. So you've got like a 5-month window to decide whether or not you're going to file the claim. And the reason we do that is that sometimes there could be a natural disaster in the region. There could be legitimate reasons why your customer is slow paying you. And so we don't want to force you to file a claim sooner than you're ready to do so. But when you're ready to do so, we're going to ask you for a copy of your purchase order, a copy of your final invoice, documents that you should have in hand pretty easily. We're going to also ask you for a copy of a bill of lading document. And that bill of lading document just shows that your customer received the goods, right? They ordered the goods, they received the goods, and therefore they have an obligation to pay for them. And we ask for these documents because then we're going to go after your customer in their local court of law. So we'll pay you out first, and then we're going to go after the customer. And 97 to 98% of the time, we get our money back. So just having a forwarder, make sure that you actually control that bill of lading document. Because if your customer says to you, hey, I'm going to send a truck to your door and we're going to pick it up, and you say, oh, great, but you're working with us, maybe that's not so great, because then you either have to chase the customer and say, hey, you know what, I need a copy of that shipping document. And we do have companies who do that, who say, look, if I am going to force my customer to control the shipment myself, I'm going to lose the sale. They consolidate orders here in the United States. They really need to handle it. Okay, fine. And we just need to have a conversation so that you have, again, a procedure in place to make sure that you collect that document. we're gonna, when you talk to us, when you reach out to us, we're just gonna assume that this transaction that you have coming up is gonna end up in a claim. And we do that because we wanna work backwards. We wanna make sure that you have all the protections in place so that when anything happens and you have to file a claim, we wanna make sure that we're paying that claim.
Well done, Ursula. Fantastic. And that last point about the freight forwarder and aligning your terms with your shipping terms with your payment terms is somewhat obscure, right? But it's a great strategy. It's a great tactic. It's a great way to protect your business. And well, that's where the expertise comes in of working with a good freight forwarder and a good banker and people like yourself. I'll comment on this is that on your I'll comment on your program is that what's really interesting to me is the competitive part of it. Like there's companies will look at this like, oh, I'm protecting myself from not getting paid. And in my career is on the sales business development side, it was a competitive issue that if you're a small, medium-sized business trying to break into, let's take that distillery, right? You're trying to break into an importer in Japan who's got 40 other whiskeys, and you're trying to break in there. And you're saying cash in advance, and you've got your competitor is offering terms, you're at a competitive disadvantage.
Absolutely.
And that's a really strong
strong reason
component
to,
of this.
right, absolutely. That's for a lot of our customers, especially when they go to trade shows. Again, this is why we say, look, don't say no, say maybe, because at the end of the day, your customer overseas, this company that you're engaging with, they may be a larger company than you. They may very well merit to getting the credit. And we understand that it's nerve-wracking because you have to think about, how am I going to chase this? How am I going to get paid? Because a sale is not a sale until you get paid. But that's the whole reason this tool exists. It's so that you can confidently give the credit. Of course, we're going to do some due diligence, but again, the due diligence on $100,000, all we're looking for is, hopefully that importer in Japan, to use that example, one of the 40 that gives credit right now, hopefully one of them can say, yeah, we give them $50,000 in credit and we give them net 30-day terms and they pay us in 45. And we would look at that and we would say, that's awesome. Well, we'll give them 100,000, and you know what? We'll even go net 90. That's valuable information. And again, if we can't get a reference, it's a competitive situation. That distributor in Japan can't get a reference from one of their others. We'll run a credit report on them and get comfortable from that perspective.
I've got a comment and an additional comment and a question. Is that again, taking that competitiveness to another level, is that okay between somebody who offers terms and somebody doesn't offer terms? And then there's the competition between, again, two whiskey producers are trying to get into this importer. One offers net 30 and one offers net 90. Who's got the advantage there? And these are all competitive tools that you've got to use in your bag that the U.S. government helps you with.
Right. And the other thing, I'm sorry. The other thing I was going to mention is that, again, if you're talking to us early, that we lots of times, like Hayes, for example, when they did their India deal, our premium rates are on our website. That information is public knowledge. If you've talked to us early enough, you can pass on the cost of this to your customer. So you don't even have to be paying for the insurance. Your customer will be willing to pay for the cost, because to get 60-day credit or 90-day credit from a vendor versus going to their bank is likely going to be less expensive for them. They're just going to be willing to pay that. And we even counsel our customers to, look, you shouldn't be just passing on the insurance costs. There's cost of money associated with this. You're going to be out 90-day terms, make them pay for it, and, give some choices. Like, look, we would sell to you on a cash in advance price, and we'll give you a discount. But if you want credit, we're going to charge you a little extra. And I'm going to say 9 times out of 10, that distributor, that customer overseas is going to take the credit. So there's no reason that the U.S. company can't be passing on that cost. You don't need to be bearing the cost of that insurance, and it'll help you grow.
Let me ask you something on that topic in general as a question. Like I encounter U.S. companies that are very used to net 30, net 30, net 30. And then they say, okay, here we go to Latin America, or here we go elsewhere.
Mm-hmm.
And can you comment on like the landscape out there that, for example, what I'm seeing is net 90 in Asia, net 60 to 90 in Latin America. What do you see of like common terms when
Yeah.
you're on open account overseas?
For sure. Great question. I would say that we're seeing it pushed out, like net 60 is a given, but we're starting to see it pushed out to net 90-day terms. Like Coval is looking at South Africa right now, and it's like the conversation started at net 90-day terms. When you think about the fact, and especially given the current circumstances with logistics, it's going to be 45 days on the water. You know, if you're given net 30-day terms, you didn't, or Australia for that matter, you didn't even give it a chance to get there before it's due. And again, especially if you're looking at distributor dealers, you're building a relationship with this company. This is your partner. This is an extension of you in that given market. They may need to stock for a period of time. The difference between insuring net 60 or net 120 is not that great. And so, you know, Hayes went from 31 basis points to 51 basis points. So we're going from $310 to $510, you know, on a $100,000 sale. It's not that expensive. And again, we recognize that there's a cost of money associated with it, but again, it's not something that you couldn't pass on to your customer to help them, you know, to have them pay for the cost of this.
Okay, a question. Where are the rates posted on the website?
So we can send, maybe Bill, with the presentation, we can blast out a link, but if you just go to exim.gov and type in exposure fees. We're going to rework our website so we can call it something else. Right now we're calling it exposure fees. And then there's a drop down, but I can send a link, and there's a drop down menu. You pick a country, and we break out premium rates in 60-day increments. So, you know, it's one rate for 1 to 60-day terms. It's a slightly higher rate for anywhere from 61 to 120. And so on. The other thing I should mention is that we limit the payment terms. If you're selling to a distributor dealer or you have a consumable item, the terms that we would limit is 180 days. So we wouldn't want you to go longer than 180 days to a distributor dealer, but even if it was an end user, but it's a consumable item, 180 days. We can potentially go out to a year if it's capital equipment being sold, or some type of, you know, to an end user, or potentially even a distributor, although that's kind of rare. But, you know, we can potentially go longer than that. We usually like to see a down payment in that circumstance, and maybe quarterly installments or monthly installments. You know, one payment at 360 is not super attractive, but we can be flexible as far as that's concerned.
Yeah, and we'll consolidate these slides from both myself and Ursula, and everybody attending we'll send out later this week.
Yeah, but again, I think the main message here is that if you have international inquiries, please answer them. Don't throw them in the garbage. Don't delete them, because there might be some real great opportunities. And, you know, pretty quickly, you can determine whether that entity overseas is creditworthy. We're coming out with an international credit application that companies will be able to use. You can adopt it and put your logo on it, do whatever you want with it. And at least that way you have an immediate response to that company. Hey, you're interested in buying from us. You asked us for credit, fill out this credit application, give us some information about yourselves, and then, you know, we'll consider it. So again, we want you to say maybe instead of no.
Okay, we've got can you see this Q&A that's
I
up on
do.
Hayes?
So there's two different scenarios here. Hayes initially started out with a single buyer policy, and the single buyer policy, the terms were net 90. And in that case, the cost of the insurance that we charged is 1.22%. That was the cost at the time that they were using this policy, probably a year and a half ago or so. And that was 90% coverage. And we're kind of getting into the weeds, but with our single buyer policy, there's a little more skin in the game for the exporter. They have 10% co-insurance, and then they pay this fee. Then they transitioned to a different type of policy. So they let that policy expire, and they set up what we call a multi-buyer, kind of an umbrella policy, where they were insuring all of their sales. And in that case, we give a blended rate, one rate. So it doesn't matter then what country that Hayes was selling to, as long as we're open for business. And we're open for business in 185 countries. There are some that we're not doing business in, but then we have a premium that is the same across all countries. So that's kind of the advantage of setting up that type of policy. Our single buyer, we have some companies that have 14 single buyer policies. They have separate policies on different buyers. And it could be because, what we've seen a lot over the year and a half is that there are many private companies, again, that offer credit insurance, but some of them have had to reduce coverage or maybe cancel limits in certain countries just because they're pulling back. And so then those exporters come to us and say, you know what, I have this policy with XYZ company, but I just lost my coverage in Mexico. I just lost my coverage in India on these particular buyers. Can you get us coverage, on those? And we've done that. And when we do these single buyer one-off transactions, the rates are all over the map, right? Because in that case, the risk is very heavily dependent on what country your buyer is located in and also the payment term. So it's not like a blended rate. Hayes later on got this blended rate. The question in there in the chat is that, are there other fees? For EXIM Bank, there are no other fees other than the premium that is paid. And the other thing I should mention is that the way premium is paid is monthly on sales that actually have happened. Okay, so I was a broker previously. Private sector policies are fantastic for companies who have some traction, who can predict for the next 12 months what their exports are going to be. One of the advantages that we have at EXIM Bank is that you might not know, this might be a new, new market, new venture. And so it's not a bad idea to get established with us. And then once you get a deal in-house, you actually have an exporter, we underwrite them, you ship to them, and it's really after you've invoiced them that you pay us the premium. And so there are no hidden costs. The way the private sector works is that you say, I think I'm going to do $2 million in sales in the next 12 months to these 10 countries. And they'll say, okay, pay us $10,000 today. If you sell 3 million, so $1 million over what you projected, you're going to get a bill for the additional sales. But if you sold 1 million, you're not going to get a refund. With EXIM Bank, you pay, you ship, you make your sale, you pay your premium. You make your sale, you pay your premium. So if there's, 2-3 months where there are no sales, you don't pay us anything. So there really are no other hidden costs. The only other thing I would say is that in some cases, again, we'll want a credit report. So there may be a cost with a credit report, but we have a lot of companies that work with the Department of Commerce. Commerce does some due diligence services on that buyer overseas. We'll take that. We'll certainly take their report basically, or we'll take a credit report. And a credit report on average runs a couple $100. So hopefully we answer that.
I think we're good. I don't see anything else. If questions come up, by all means, we'll get the slides. You have our contact information, reach out. Well done, Ursula. Again, thanks for your time. Thanks for
that intro too. Yeah. Appreciate it. But yeah, hopefully the folks who are on the line today, we just want you to reach out. We're happy to talk to you. That's where we're here. If we're not the fit, we'll find you somewhere that is.
Okay, thanks everyone. Well done.
Thank you so much.
You're all welcome to join us next month. We'll let you know when it's coming. Thanks.
Take care. Bye-bye.